Nvidia beat expectations for the 14th straight quarter. They guided $91 billion in revenue, and the stock moved 1.3%. The information content of an Nvidia earnings beat is now effectively zero. The broader market already priced that core growth in. To see where the capital is actually moving next, we have to look downstream, into the supply chain reactions during the 24 hours after the print. This chart shows post-Nvidia one-day returns. Compute and memory surged, while physical infrastructure sold off. Astera Labs, a connectivity chip maker, spiked 18%. Vertiv, a power and cooling provider, dropped 2%. This chart maps Nvidia's quarterly revenue consensus estimates. Every single quarter, the street underestimates forward demand. The new Q2 guide sits 5% above consensus. Investors are not questioning whether AI demand is real. That identical demand signal triggered a sharp division over how quickly the physical world can absorb it. The clear winners of this split belong to the digital layer. These companies manufacture the memory modules, PCIe retimers, and connectivity silicon that sit physically on the same board as the GPU. This chart highlights one-day returns exclusively for digital layer companies. The market response was immediate and uniformly green. Components from Astera Labs and Micron have a near-zero revenue lag. Their hardware ships within a single quarter of Nvidia's. AMD operates right beside them. When Nvidia's demand outpaces its supply, AMD's inference chips serve as a secondary capacity relief valve, converting orders into revenue within 1 to 2 quarters. Nvidia's forward guidance completely eliminated the risk that hyperscaler orders were phantom. With that uncertainty removed, the immediate order books for these digital suppliers were validated. Physical proximity to the central processor equates to instant revenue conversion. The digital layer surged because near-zero physical distance guarantees near-zero revenue lag. The physical layer faces a completely different timeline. These are the heavy industrial pumping systems, the massive power distribution networks, and the physical cooling necessary to keep server clusters operational. This chart details 5-day returns for physical infrastructure providers. Despite Nvidia's record print, Lumentum and Coherent remained deep in the red. Vertiv dropped 16%. This layer was already selling off, and Nvidia's confirmed demand failed to stop the bleeding. Their revenue is gated by real-world friction. Installing these systems requires securing local building permits, expanding physical data centers, and waiting on severely constrained utility grid connections. These long-duration infrastructure projects are also fighting macroeconomic gravity. With the 10-year bond yield holding near 4.65%, investors demand a steep discount to tie up capital in delayed timelines. The market fully accepts the core AI demand exists. It simply refuses to bid up infrastructure companies constrained by slow, unyielding physical limitations. Investors are mapping this divide using a mechanical metric, revenue conversion lag. This chart illustrates conversion lag, quarter by quarter, tracking the delay from Nvidia's demand signal to a supplier's revenue. Notice the chasm in the middle. Digital side converts in 1 to 2 quarters. Physical infrastructure sits isolated 2 to 4 quarters out. The inverse relationship dictates the pricing. The further a company operates from the GPU, the longer the wait. That added time introduces uncertainty, and the market prices that uncertainty as a strict discount. Securing the silicon is no longer the primary hurdle. The defining bottleneck of the AI boom is surviving the timeline required to build the structures that feed it. This leaves investors analyzing a specific tension. Is the lag in physical infrastructure a permanent headwind for this cycle, or an aggressive market mispricing? This chart displays composite opportunity scores. Only Astera Labs and AMD cross the 60-point bullish threshold. The physical layer remains uniformly neutral. Yet 2 years ago, power and cooling lagged by 3 quarters, and when orders finally converted, these exact discounted names triggered triple-digit rallies. The digital trade repriced instantly and is largely complete for this earnings cycle. The remaining unresolved tension sits squarely in this heavily discounted physical layer. The upcoming catalyst arrives with Marvell's networking silicon earnings report on May 27th. It serves as the bridge, confirming exactly when hyperscaler demand moves from isolated digital chips out to physical data center buildouts. Proving the scale of Nvidia's balance sheet is an answered question. The open variable is whether the physical world can construct reality fast enough to house it.